Hello and welcome back to the Built Different podcast with your host, Steven Pettigrew. Today's episode is a solo episode and it's all about personal guarantees. Now, this is something that we come across all the time, every day, every week at Monopoly. We have people reaching out to us that have signed up to big amounts of debt in their business and they've signed a PG that goes along with that. And that causes a lot of problems for business owners, particularly when they don't know what it is they've signed up to and the business starts to struggle. They eventually start to struggle to keep up with some of the payments. So on this episode, I wanted to go through a bit of what are PGs, why you should avoid signing a PG if you're a business owner of a limited company, and some solutions to help you get out of a PG potentially, mitigate it, or just manage the cash flow going forward. So what is a PG first of all? So when business owners look for some kind of borrowing, a lender will typically ask for a personal guarantee that goes along with that loan. Now, the reason they want that on there is because if the business goes under for any reason, it becomes insolvent and can't repay that loan, then the business owner can become personally liable for that loan. And what does that actually mean? It means that if you haven't paid up that loan for whatever reason, they can come after you and your personal assets. So that could look like your house, cars, cash, any other assets you've got. And it doesn't take a genius to work out that can have a devastating effect on your personal life and obviously your professional life. So when these companies are looking for them, it's very important to understand that you're signing this as a director of a limited company. And the clue's in the name. A limited company is there to protect your liability as an owner. It's to allow you to take a bit of risk. So when you're looking for borrowing, it's really important not to just dive in and sign a PG, because it can have some, as I said, drastic and devastating effects on your business. And what does that actually mean? It means that you've not actually done due diligence on that. So you've maybe taken out the borrowing, you've not got a cash flow forecast in place, you maybe lose a customer, and then you're in a bit of trouble. You can't keep up with the payments, and all of a sudden you start getting under severe pressure. So that's what a PG is and why lenders look to get you to sign up to them. And it's something we come across all the time. I would say for every 10 business owners that approach us, maybe 8 out of 10 have a PG and they tend to be struggling to pay them back. So really, really important to understand what they are. Look at the actual terms you've signed up to. If you've actually signed an indemnity with the personal guarantee, that's even worse because they can follow you around no matter where you go. So that's really important as well. The reason for avoiding PGs, if you have a business and you need some funding, what you should do first of all is look for funding where there's no personal guarantee involved. You can get several options and funding out there that doesn't require a personal guarantee. Private funders, private investors, some second tier lenders can do it. If you have a strong enough business with strong enough assets, then even the high street lenders won't ask you, or they might ask you, but you can always decline for a PG. So really, really important to avoid them. A couple of stories with some PGs that have went badly wrong to maybe give you some light around this. I used to work with a small private equity firm who would buy up companies using leverage. And in those scenarios, that company bought 26 businesses over a 3 or 4 year span. And the people running that over leveraged it. They signed up to personal guarantees. And when the interest rates spiked in the last few years, they couldn't then keep up with the payments. And what happened then was the assets got called in for the business, and the remainder of that was then chased to the owners of the business who had assets, houses, cars, etc. And they had to liquidate quite a number of their assets in order to get rid of the personal guarantee. And that obviously has a huge impact on their personal lives, their ability to make money, their reputation, really important as well. That gets damaged because if you have a business that goes under and you're a director of that business, you're very unlikely to start again without any baggage. So it's really, really important to understand what you're getting yourself into. Another chap who got himself into a bit of trouble last year. I won't name the company, but his name was Mike. He came to us in November last year and came to us a bit too late at Monopoly. So he came to us with massive cash flow problems, huge amounts of debt. And when we got to him, or when he got to us, he had signed up to 8 different loans with 8 different lenders, all with personal guarantees, for a total sum of £450,000. Now, these companies were handing these loans out without doing their due diligence. They just wanted to hand the money out, knowing that this guy had assets as a backup option. So they weren't doing their proper due diligence on him. And because he wasn't tracking cash, because some of his customers weren't paying him on time, and the business was falling all around him, effectively, and he'd signed up all of these loans within a very short space of time, maybe 3 to 6 months, he'd signed up to all of these loans. And that was absolutely devastating for him. So in the end, his business went under in the early part of January. We came to it too late. There was nothing we could do other than try and mitigate some of the pain that was coming his way, because no one's going to give a business £450,000 just to get rid of loans and save his business when he wasn't tracking anything, when he wasn't tracking cash, when he wasn't tracking sales, when he wasn't chasing money, when customers were leaving him, staff was leaving him. It was a absolutely distressed business. So yeah, the best we could do for him in that situation was actually mitigate it. So it happens all the time to business owners where they're uneducated because no one teaches you this stuff in school, and they end up taking out these loans, and it will bite you on the bum if you've not actually looked after yourself. We've recently added a new member to the team. We've now got a legal representative in Monopoly who has loads of experience, years and years of experience of mitigating and eliminating personal guarantees for business owners like you if you have signed up to them. Now, if you've signed up to a loan with a PG, you should be looking to pay that in full. However, if the business gets into distress or you've been signed up to a PG without seeking proper advice, professional advice, then you should look at your options in terms of the validity of that personal guarantee. And also, if you can't maintain the payments that you have signed up to, you need to take action now in order to reduce those payments or stretch the payments out in order that the cash flow you've got can sustain it. Because the worst thing that could happen in that scenario is that you fail to keep up with those payments. It can put the business under, put stress on you, your family, and ultimately the business could go under. The worst case scenario is that you get your house taken off you, your car taken off you, any other assets, and that can destroy your life, which is something, if you take action now, can actually be dealt with. So we deal with this sort of stuff all the time. We have business owners that come to us on a weekly basis. Just yesterday, I offered a solution to a business owner who was in a very precarious position. He's got £150,000 of liability that he can't pay. And we have offered a solution where we can eliminate all of that, or at least half, and that can transform his business. You've got to remember, in this situation, the lenders will want to negotiate and make a commercial decision. It's better for them to get pennies in the pound than absolutely nothing. So really important to remember that. Now, if you're looking to have a discussion around this, we are getting inundated with requests at the moment to help business owners on this. But if you're looking for support, if you're serious, if you're an action taker, if you are in a bit of trouble and need some help, then head to our website, monopolycapital.com, or send me a message on LinkedIn, Steven Pettigrew Investor, and we'd be delighted to help. So stay tuned for more episodes on this sort of topic. And if you need any more information, as I say, head to monopolycapital.com or my LinkedIn profile.